Now, that's the diplomatic fallout and an analysis of that. Let's also look at the economic aspect of it, particularly as far as India is concerned. Let's tell you what the US-Iran deal means for India. Now, Prime Minister Modi's welcomed the US-Iran understanding, calling it a step towards regional peace and stability. The Prime Minister has highlighted the global economic impact of the conflict. He stressed the need to ensure freedom of navigation, unhindered commerce, and a lasting agreement that brings stability. What are we really talking about over here in terms of the implications of the US-Iran breakthrough for India? Let's take a look at this. One is, of course, oil prices themselves. Let's take a look at that. Let's quickly bring that graphic up on the screen. Oil prices could cool down and lower crude prices could mean fuel prices may ease. Or there are some analysts who say that this could take several months. Some even saying it could be as long as 6 months before that actually happens. Now, if the energy security improves, India imports oil via Hormuz linked sea routes. There's also, of course, a larger question of the shipping risks declining and therefore reduced threat to commercial vessels as well that we've been seeing take place over the last few weeks that has played out. There's also a fact that there are several Indians who are working there. It would be safer for Indian seafarers as well as those who are working on ships and, of course, in the larger Middle Eastern region. As far as trade routes are concerned, these are now expected to stabilize, and uninterrupted maritime traffic is also going to benefit not just Trump, but also, of course, India and other countries as well. Implication number 6, there's less pressure on the rupee. A softer oil bill will mean reduced pressure on the rupee as well. Let's also tell you about what the officials and economists are saying about the recovery for oil companies once the US-Iran deal is finalized. They're saying that the market may take months to rebalance. This is Asim Nasir, CEO of the Saudi Aramco company. Full repairs could take 3 to 5 years to complete, is what Qatar officials are saying. There's also the fact that LNG delays would hit cargo schedules into 2027. This is what lawyers to S&P Global Energy Platts are actually saying. Let's now listen into, in fact, this conversation that I had a short while ago with Professor Stephen Hanke on what this really means for the global economy and for the Indian economy specifically. Joining us for more on what really one can expect following this announcement of a ceasefire and, of course, will there be lasting peace? Many questions that emerge, including the economic impact of all of this. With us is Professor Stephen Hanke, who's a professor of applied economics at Johns Hopkins University, also a distinguished senior scholar and commodity trader as well. Thank you so much, Professor Hanke, for speaking to us. You've earlier said that Iran is channeling Muhammad Ali's rope-a-dope strategy and could deal a knockout blow to the US. Now, with Iran claiming victory in this war, given your analysis that Iran is winning the war and controls the Strait of Hormuz, do you feel that this ceasefire represents the biggest defeat for the US since it entered the conflict?
Yes, I do. And the one way to put this in simple terms is the US and Israel start a war with Iran. And what was the situation before the war? With regard to the Strait of Hormuz, the strait was open. The war started, and the U.S. and Israeli, in effect, closed the strait. And now this agreement, which, by the way, we don't know any details of the agreement. It's a verbal agreement, and as the Hollywood mogul Samuel Goldwyn once said, a verbal contract is as good as the paper it's written on. So we have no idea what's going on. But Trump claims that the strait will be open after the signing of the agreement in Geneva on Friday. So we've gone from a situation where the strait was open, the U.S. and Israel shut the strait. Now, Friday, we're going to have an agreement to open the strait again, and Trump claims that's a big victory.
Right, and that's really the big question because, you know, if you look at the various claims in terms of the purpose of this, etc., one is, of course, the Iranian leadership itself. Now, if the leadership survives in Iran, its energy sector once again, regains access to global markets through sanctions relief. And then Tehran is able to present the agreement as a victory at home. So what has the United States achieved after bearing the military, political, and economic costs of this conflict remains a big question.
Well, it doesn't remain a big question to me. They have a big negative sign behind the initials USA equal negative. It's all negative. There's nothing positive. That's why it's a major strategic defeat. You have, by the way, a regime in Iran that is probably more hard line than it was with the old regime. You have to look at the war in terms of like an event study. Event studies in finance are the following kind of thing. You look at a stock's price before the event. There's an announcement, an event, the earnings report or something like that. And then you look at the stock price after the event. So what you have to do when you're analyzing this war is look at all the elements before the war, and then we have the event, the war. And then we have after the war with this so-called memorandum of understanding, which no one knows what's in it actually. And you want to see what the elements look like after. And all the elements to me look like they're very good. What is leaked out, what the gossip is and so forth, the speculation about what's in the agreement, it all looks negative for the United States. And by the way, I don't think Trump cares whether it's negative or not, because he'll spin it as a positive, and he just wants to get out of the thing. He wants out because the war has done such crippling damage to the global economy and the United States. And you're speaking from India. It's been a big time hit in India.
Right.
Why do you think the rupee is crashing? Why do you think the stock market is crashing in India? All of those things are negative collateral damage related to the war.
And you know, it's not just the U.S. economy itself that's been hit, as you rightly put it. This is, of course, the huge fiscal spending as well that is there in the United States. But you've also said very importantly that a ceasefire does not necessarily mean oil prices will fall. While physical crude, cargoes in some Asian markets have reportedly been trading at a substantial premium, while futures markets appear to be more optimistic, where do you see Brent crude heading by the end of 2026?
Going up. And the reason for that is the following. If you look at the International Energy Agency in Paris, which is very accurate in terms of forecasting what's going on, they see a deficit if the agreement is signed. If the Strait opens, they still see a deficit until late 2026, late this year. And then a small surplus will start developing. But that surplus will take over a year just to fill the depleted inventories that have been used up during this war period. And in addition to that, there'll be additional demand because there are many places like the Philippines, they had no strategic reserves at all. And now they will want to build strategic reserves. Same with Indonesia, for example. All the Asian countries, by the way, including India, will want to have levels of inventory built up that are greater than those inventories were prior to the war,
right,
for kind of insurance, shall we say. So it's going to take a long time for the oil markets to settle down, and the price will be up, not down.
Right. Now, one of the things that we've witnessed during this war is that how a single choke point, like the Strait of Hormuz, can send shockwaves through oil markets, whether we're talking about inflation, whether we're talking about the global economy. So what is the long-term solution and learning really from this? Because can the world continue to rely on just a handful of strategic waterways, or is it time to fundamentally rethink global energy and trade security?
Well, I think there will be rethinking and more hedging and a more less exposure to one or two choke points. That's coming, and we see that, by the way, manifest in the move away from one of the big choke points, which is the Strait, and moving into electric vehicles, for example. The demand for electric vehicle has skyrocketed since the war started. So that transition away from fossil fuels, I think, will be accelerating over time as people try to diversify and reduce the risk associated with the possibility of war, which, by the way, gets to a big point. One way to protect yourself and ensure is to engage in diplomacy that reduces the chance of starting a war. Why do we have the problem with the choke points? We have a problem because there's a war.
Right.
The U.S. and Israel started a war. People don't get the connection. It isn't the Iranians who shut down the Strait. It's the United States and Israel, because the Strait was open before the attack by the U.S. and Israel on Iran. It was open, free to passage. Now, by the way, even if it's open, the situation's different because the Iranians know they have the potential to shut it down if they want to.
Right, and that gives them leverage.
Yeah, they have leverage, and that was something that wasn't manifest before the war started. So that's another negative when you do the event study before the war, after the war. Well, after the war, it's a negative.
Absolutely. And in fact, one of the points that you were mentioning earlier in terms of the fuel shortage, the global crude shortage, one of the points is that how will this impact on the global economy? Because this kind of a fuel hike already would have some kind of an inflationary impact across the world. So where are we looking at the world economy, including, of course, the very fact that the federal deficit, for instance, in the U.S. is already 6% over the GDP. The national debt is past $38 to $39 trillion. What are we looking at in terms of the global economy?
Well, the global economy, just last week, the World Bank came out with an analysis of the world economy and have downgraded the world economic growth to a real growth of only a piddling 2.5%. So all these things are depressing, and they will remain depressed because even if you open the Strait and there are no problems going forward, it's going to take a long time to adjust things. Because remember, even in the Gulf, there are 11,000 ships trapped in the Gulf right now. And going out of the Gulf, the usual traffic is around 100, when it's free, about 130 ships a day. So do the arithmetic on that. It's going to take a long time to get the ships that are trapped in the Gulf even out of the Gulf.
Right. Right. And lastly, while a formal agreement is expected to be signed on Friday, as you rightly mentioned, in Switzerland, given the history of ceasefires we've seen in Gaza and Lebanon breaking down with few consequences, how confident are you that this agreement will be any different?
Oh, it won't be any different because you have three parties involved in this, and two will be signing, Iran and the United States, on Friday. But one party will not be there, and that's Israel. And Israel is a spoiler. They'll try to sabotage the implementation of the deal. Whatever is in the deal, the Israelis will try to sabotage it. And we noticed, by the way, hours before the agreement was announced, the Israelis were breaking a ceasefire in Lebanon, bombing Beirut. So we have to keep our eye on Israel because they are a deal breaker. They break deals regularly. That's the history.
All right, Professor Hanke, thank you so much for taking the time out and breaking that down for our viewers.
Thank you.
And with that, it's a wrap on the briefing room tonight. Do join us tomorrow night at 10 p.m. for another edition.